Hey, hi, Anisha.
Hi, Swapnil.
So, Anisha, tell me, as an economic student, what comes to your mind when I say Japan?
So, the first thing that comes to my mind is like negative interest rates, quantitative easing, yield curve control, aging population, and so on. There is always something new and interesting happening in Japan's economy, which makes me more curious.
Yeah, Japan has always been a different case study altogether. Why inflation is
Right.
not increasing despite low interest rates, or what will happen to future economic growth due to aging population. These are some unique questions people were, are, and I think will be asking in the future also.
Absolutely. Even I fail to understand some of these things within Japan's economy. It's one of a kind economy which has seen different stages of growth and which probably will continue to be a distinct economy where our textbook knowledge will not be enough to understand it. For example, like recently we stumbled upon Japan's current account balance data and that intrigued me to inquire further about this country.
Hmm. Okay, what was that?
So, as some listeners would know, that India Data Hub publishes weekly newsletters where we write what new economic and financial data got released during that week and explain the reasons for changes in the data. So, a few months back, we wrote about Japan's all time high trade deficit in the month of January. We usually don't track Japanese economy, but since trade deficit reached an all time high, we thought of reporting it and then started understanding more about it. So, one peculiar thing we saw was that even though Japan has been running a high trade deficit for quite some time now, but its current account balance is still in surplus. And we know that the trade balance is exports minus imports of the goods and services. So, if the exports are higher than the imports, we have trade surplus and vice versa. Now, Japan has trade deficit, which means its imports are higher than the exports. But the overall current account balance is still in surplus. And that is something which caught my eye, and that's why I decided to take this topic to our podcast.
Wow, that is really an interesting point because generally we don't analyze current account balances beyond trade balance because for most countries, trade balance itself reflects most of the current account balance.
Yes, but that is where Japan is an outlier, right?
Yeah, right. I think before talking about Japan, it would be better if we step back a little and revise what is current account balance for our audience. In the last episode of the first season, we discussed international transactions and the balance of payments. In that, we explained what the current account is and what are its components. But as said earlier, components apart from trade balance were not discussed in detail. So let's start with the basics. So we all
Okay.
know that current account has four main components. First is goods, second is services. Together they are termed as trade balance. So if the exports of goods and services combined are more than imports, then we have positive trade balance, which is also called as trade surplus, and vice versa. The third component is the primary income, and the fourth component is called secondary income. Out of all, currently we are more interested in primary income, right?
Yes, so let me explain what primary income is. So it has basically two main components. First is compensation to employees. So it includes amounts that are paid to non resident employees of the Japanese companies or the organizations. It also includes salary received from a non Japanese company. The second main component is investment income. And this is very important. Investment income can be of two types. First, in the form of FDI, that is foreign direct investment, and other in the form of FPI, which is foreign portfolio investment.
Yeah, FDI means when a Japanese company invests in other countries in the form of, say, a shop, factory, or office. That is FDI. The best example is Maruti Suzuki. Suzuki is a Japanese firm which has invested in India in partnership with Maruti. So that is an example of FDI. And FPI is a form of investment where the company is not interested in running a business. It invests in shares of a listed company or subscribe to bonds of a company or government in a foreign country. Here we have many examples, and like financial firm called Nomura, that can be a good example of FPI. It invests in mutual funds or sovereign bonds or many other things.
Right. And from those investment, that Japanese company or financial institutions earn money in the form of interest, dividend, and etc. So that income gets included in the primary income. And the focus points for today's episodes are these two sources of investment income.
Yes, now that we are done with what the primary income is, let us jump to the data. Let us see what it shows. So, this is a quarterly chart of Japan's current account along with its components. The black line is the current account balance, which you will always see in the positive territory, which means it has always been in surplus for a very long time now. There is a red line which represents trade balance. Trade balance, as we all know, is the difference between exports and imports of goods and services. We can see that the trade balance has been negative recently. But there is one component which has been stronger and continues to rise, which is the primary income balance. It is represented by light yellow bars.
Yeah, the data clearly shows us that the current account balance has remained in the positive territory only because of the primary income.
Yes, and I think this is peculiar to Japan only. It has the highest net primary income balance in the world as of 2021. It stood at 202 billion US dollars. That is followed by Germany at 149 billion US dollars, and then the US at 139 billion US dollars. We checked Germany's data and we can clearly see that it is more dependent on goods exports to maintain a current account surplus, although it has a substantial primary income surplus too. But we can see that mostly it is the net exports of goods which has the highest proportion than primary income. We did not check the US data as the current account is in deficit, but we instead checked China's data, which has the highest current account surplus in the world as of 2021. Its data too tells us that the current account is highly dependable on the trade balance. Also, its net primary income balance is in deficit. It is negative 162 billion US dollars as of 2021. And just to give a context, India's primary income balance too is in deficit at negative 38 billion dollars. So clearly, Japan is somewhere outlier in this aspect.
Wow, I think these are interesting charts, and the listeners or viewers would be amazed by looking at these data points. So now let us go back to Japan and try to figure out what more can we unearth from this data set. So I reiterate that the net primary income has always been an important component of the Japan's current account surplus. Prior to 2010, it was between 50 and 100% of the current account surplus. Later, that percentage increased as trade balance started declining, which dragged the current account surplus downwards. So, the contribution of net primary income from the period onwards is therefore more important in keeping current account in surplus.
Hmm. It is important to know something about Japan's economy. You rightly said at the beginning of the podcast that Japan has an aging population. And this is not something that has happened in recent years. We have been seeing this for a while now, and that has taken a toll on its economy. Dr. Jim Walker, a famous economist, once said, I don't know the exact words, I'll just paraphrase it, that the situation in Japan is such that even if the GDP remains stagnant or grows at 0%, then also the Japan's per capita GDP growth will continue to grow because of a declining population. Also, its private consumption expenditure as a percentage of GDP declined post 2010 like many other advanced economies. Its annual growth rate of private consumption has been on an average lesser than 2% since then. That's what we need to keep in mind when we analyze Japan's economy.
So, we can say that due to inability to grow domestic demand, Japan has played on external demand for goods and services as well as capital. Plus, we all know that Japan is known for its technological advancements and R&D. Because of these capabilities, it has been able to be a global leader in many sectors. That has helped it in building the many business abroad and at the same time investment in financial portfolios too. So these things have helped it derive the primary income.
Absolutely correct. Another interesting point emerges if you look at the chart of composition of current account surplus. You can see that Japan has changed from a trade based current account surplus to investment based current account surplus, or simply put, trade nation to an investment nation.
That is correct. Also, even within the primary income, there has been a shift in the composition of investments. Earlier, income from FPI was higher than the income from FDI. Until 2009 or 2010, close to 80% of the primary income came from the portfolio investments. It gradually reversed, and now around 80% of the primary income comes from the direct investments or FDI.
This is a remarkable shift, and FDI is supposedly more sustainable, hence less volatile category compared to FPI. So we can assume or estimate that primary income will continue to remain high in Japan because FDI is not that kind of investment where investors will pull their money immediately just because say interest rates rose or fiscal deficit increases. Investors usually have a long term view, and therefore I believe such type of investment would continue to keep Japan's current account boat floating.
Well, that is it from our side. We do have more data that we can analyze and can show to you. But we realize that it will be much better to stop at a right time before you start to yawn. So we will be uploading these charts and a few data points on our website soon. But before that, you can obviously pause this video in between to see the data.
Yeah, we don't want to show you that we know Excel and can do many charts as we want, but we wanted to share this topic and the uniqueness of Japan with all of you.
Yes, also this topic might be new for you, but trust me, it was new for both of us and we were learning as we were preparing for this topic. And I guess we will continue to learn about it even after we release this episode.
Yeah.
Overall, it was a great experience.
Yes, Anisha, it was indeed a great experience and it was really nice talking to you too. I hope we will meet for the next episode very soon. As usual, please follow or subscribe to this channel and podcast wherever you are listening to or watching. Also, follow India Data Hub. Its co founder Ashutosh and both of us on social media. All the details are available in the show notes. Bye and thank you.